The following financial information was extracted from the accounting records of Bundo Limited, a public limited company. You can see the statement of financial position as at that date. Then we have been given statement of comprehensive income for the year ended 31st October 2023. Then we have some additional information where the first one is capturing the property, plant, and equipment at cost, and then you can see its carrying amount having the accumulated depreciation provided. During the year ended that 1st October 2023, the property was revalued upward for a gain amounting to 1,200,000. That is revaluation upward. So the value of property, plant, and equipment, its value was valued at a higher rate. The company does not make any transfer for excess depreciation upon revaluation. However, it accounts for the deferred tax on revaluation gain. We shall see how we account for that. The income tax rate applicable to Bundo Limited is 30%. Depreciation on property, plant, and equipment has been charged to profit or loss. Then 2, during the year ended at 1st October 2023, Bundo Limited acquired some patent rights at a cost of 5 million. I hope you can see that. Any amortization of intangible asset has been included in administrative expenses. Good. The company repaid some borrowing which had matured during the year and issued new rolls amounting to 3 million shillings. Required to come up with a statement of cash flow for Bundo Limited for the year ended at 1st October 2023 using the indirect method in accordance with the requirement of International Accounting Standard 7. International Accounting Standard 7. So class, if you are with me, we can start this question. And we start with the heading. This is Bundo Limited. Statement of cash flow. For the year ended. Is 31st of ended 31st of October 2023. So that is it. That is the heading. When you're tackling any question under reporting, you need to include the heading. Therefore, we have 2 columns, and our shadings, we have to eliminate 3 zeros. So our shadings, we have to eliminate 3 zeros. So I want you to contribute very fast. in giving the results. So the first thing, when you are using the indirect method, we start with the first activity, which is operating activity. So the first thing is the cash flows from operating activities. Cash flow from operating activities. And then under cash flow from operating activity, if you can clearly remember what we had learned from the format, is that we start with the profit before tax. Now, can you check from the question? Profit before tax? Let me just to use that. Give me the profit before tax for this question. Very fast. How I wish that we do this very fast. If the times allow, I want us to complete this question. So the faster you do it, the better. So what is a profit before tax? You can see there are some people who have just joined. I will share the question again, but before then, for those people who started with me, please give me the profit before tax. Please give me the profit before tax for this. I really appreciate. This is chart. So profit before tax. Of course, that one I expect to get it from what? From my income statement. And if I look at my income statement, I can see 18,700. Thank you so much, Simon, for that answer. 18,700. So class, you can see that that is just a matter of looking. It's just a matter of looking at what the examiner wants, profit before tax, and then we are just for non-cash item. Adjust for non-cash item. So class, in this case, I'm not going to put all these here. Can you also remind us on how to get the profit before tax from profit after tax? Okay, that is Kerosi. Yes, I'm going to remind you. I don't know whether you'll allow me to, first of all, move forward, and then I do it at the tail end of our session. Is that okay, Kerosi? I'll just do that. Please remind me at the tail end of our session so that we are able also to remember what we are supposed to do in the case of profit after tax. I'm going to do that. So our non-cash item, I gave you an acronym, and that acronym is dial G, dial GF. So if I come here and put my dial GF here, I just put it here. This is presenting depreciation, impairment, of course, impairment of intangible what? Asset, amortization. I have loss on disposal. In our case, I've not had anything to do with the disposal. We have gain on disposal, and then the other one, we have the finance cost. Now, remember, we want to adjust this profit. This is the profit that we want to adjust. So whatever that happened to this profit, whatever that happened, for us to arrive to this profit, we first of all have to check whether there is an item, an item that was involved here. When you check at our profit, above our profit before tax, can you see any item that is reflected here? Kindly, very fast. For the sake of those people who have joined, allow me to share this question, and you take the picture very fast. I just want us, if you are around here, I'll be able to finish this question because I know the importance of this question. So for those people who have just joined, can you take a picture of that question? Very fast. Just want us to move. I hope you have taken. I'm very fast. Can you confirm? Somebody to confirm? Confirm. Have you taken the picture of that page? Somebody. I just want to move. Okay, that time is enough for you to take a picture. Picture cannot take long. You can as well take that page where we have the income statement. I can see my profit before tax there. Above it, I can see finance cost. I hope you people, you can see that finance cost that we are asking. Finance cost is part of what? It is part of our non-cash item. Finance cost is part of our non-cash item. I hope now everyone is having the question, unless now you don't want to have the question. Everyone in this room is having the question. Is that true? Is that true? Can you confirm if you have the question with you? Good. Now, can you check here? I can see above my profit before tax, I have finance cost. And what happened to the finance cost? Finance cost was subtracted for us to arrive to this profit before tax. How much is our finance cost? We want now to adjust these profits with normality. We want to adjust these. Yeah, but now we have very many people who have just joined, and they have not done it. So I have to do this very fast. So you can help us to get the figure that we had in our last class. That will be very, very good, Wali. Thank you. So finance cost is 3,800. It was subtracted in that case. Therefore, when we want to adjust it, we add it back. 3,800, we are trying to add it back. And then we check any other item that we are having here. And before we check any other item, or we can just go direct. You see, Wali is telling us that we had done this part. We want to go in the other part of what? Part of investing activity. So allow me to move to where I have additional information number 1, which will help me to compute what? The depreciation. Class, I want you to get it to get this very clear. I want you to get this very clear and have it. It will be useful as far as financial reporting is concerned. The property, plant, and equipment was made up as follows. So we can see cost of valuation, and we have accumulated depreciation. We also have the carrying amount. So we say that the carrying amount is the same as net book value. Carrying amount is the same as net book value. So in the case that we want to determine the depreciation, we need to know which method to use. We can use the cost method, or we can use the what? The carrying amount or the net book value method. So, and this is our PPE account, hope PPE account, and then on the other hand, I have what? I have the accumulated depreciation account. So this is very important for me. I remember I gave some people this work to go and do what? Do debit, credit. So somebody to tell me, my PPE account, does it have a debit balance or a credit balance? PPE account, does it have a debit or a credit balance? PPE account, debit, credit, very fast. Debit, credit, very fast. This is an asset. It has a debit. It has a debit balance. Therefore, in this case, you have to check. The cost of our PPE. The cost that was brought down. The balance brought down. The balance brought down. If I look at it, it was 126,200. 126,200. So the balance carried down should be on the credit side, which is 138,200. 138,200. So I hope you have noted how we are doing this. We are debiting, the balance that was brought down, and then we are crediting the balance that was carried down. And this is the position. The position for the brought down is at the top here, and then the position for the brought down, the carry down is at the bottom there. And then you ask yourself, what happened to the PPE? There was revaluation gain of how much? Revaluation gain is going to increase the value of our PPE. So how much is the revaluation gain? Somebody to give us the revaluation gain of our PPE. Revaluation gain of our PPE. How much? Somebody is giving us this. Valuation gain. Everyone is having the question, so you can as well check. How much is the valuation gain? Can you see still below what we have, that table, we are told that it was revalued upward, and the amount was 1,200. With that, we are able now to go on the other side to do the same for our accumulated depreciation. Is accumulated depreciation an asset or a liability? Is it an asset or a liability? Accumulated depreciation. Of course, it's an expense, right? Therefore, it will be having a credit balance. So the balance brought down in Ngapi, you can see it is 12,600. 12,600. And then we have balance carried down of how much? 19,800. Then I can have my figures there. So can you give me allow me to adjust hapa kidogo. All right. Can you give me these figures? Can you give me this figure? Can you give me the balancing figure this side? You can see this side I have 138,000, 138,200, 138,200. This side, how much do I have? 127,400, 127,400, 127,400. Therefore, can you less 127 from this? This is 138. Remember, it should balance 138, 200. So subtract 127,400 from 138. Then we get acquisition. They purchased. They acquired PPE. Acquisition. They acquired PPE worth 10,800. They acquired PPE worth 10,800, and we are done. Then we check on the other side. On the accumulated depreciation. Here you shall have 19,800. So if this is an accumulated depreciation account, the amount to balance here will be the depreciation. It will be the depreciation. So the balancing figure is the depreciation amount, and it is the one that we are going to bring here. And of course, we are going to add it. Depreciation, we know that it is always done what? Depreciation is always subtracted in our income statement. When it comes to cash flow, we are adjusting it back. So we are going to add it back to our PPE. It was subtracted from here. Therefore, we have to add it. 7,200, and we're done with that. Then we check any other asset, any other non-current asset. I can see we had an intangible asset. We need to first of all finish this. Remember, this one we have used the cost approach. We have just used the cost approach. You can as well use the net book value approach, and you're going to get your result as the same. For the interest of time, let's proceed to the intangible asset. Intangible asset account. Okay. Intangible asset account. So can you give me the balance that was, this is an asset. So balance brought down, and balance carried down to be on this side. So can you give me the balance brought down for the intangible asset? 2022, 23,680. 23,680. That is the balance that was brought down. Then the balance that was carried down is 24,290. 24,290. But there's something that we were told that during the year, something happened. I wish that somebody can pick it very fast and tell us what happened during the year. From the statement that I have here, statement number 2, during the year ended at 1st October 2023, Budo Limited acquired some patents, right, at the cost of 5 million. Can you tell me where should these 5 million be placed in our account? Where should the 5 million be placed? We acquired these patent worth 5 million. Exactly. Thank you so much, Caroline. Caroline is telling us that we should debit. This is an asset. So our intangible asset increased. It increased. Therefore, there was acquisition of this item worth 5 million. Now, can you give me the balancing figure? Give me this total, and then we say if there was impairment. In fact, the balancing figure here will be the impairment. I can see this will be above 24. So what is our total on the debit? Our total on the debit side. Remember what we said, that the faster you do it, the better, because we shall be in a position to conclude this. 4390. So this has just decided to give me the impairment. So you can get the total. The impairment is 4390. Remember, impairment is subtracted, and therefore we shall be adding it back to our what? We shall be adding it back to our profit before tax. And then we go to the changes in working capital. Here will give us very fast changes in working capital. I hope everyone is comfortable as Willie or who is giving us the changes. Whatever that we got, is going to give us that very fast, so that we are able to do what? We are able to save time. So can you tell us from the first item that we had here, is inventory. We computed, but I say that for the asset, if you want to solve asset, you just take the closing, opening minus closing, opening minus closing, opening minus closing, you'd be in a position to get your figure. So why is it why ama ni nani tupatie what we got here, then we got something on receivables, and then payable we also got something. So can you give us those? Inventory was minus 120. So for those people who joins, just take the opening of the inventory and then less the closing of the inventory. You get it is 120, which is an outflow. What about the receivable? Receivable, it was 220, which is an inflow. And then give me the other one. The last one for the payable. Payable, tunataka tusonge vizuri, and then we see how we help each other. So what about payable? 400, which was an outflow. 400, which was an outflow. Class, please confirm whether we are together up to that point. Please confirm whether we are together up to that point. Just type Y for yes, whether we are together, to show whether we are together. Are we together? Are we together? That's just simple. Just simple. For the payable, you do vice versa. It is closing minus opening, like that. Hapa hizi ni marks za bure kabisa. Marks za bure. Now, in that spirit of adding up and subtracting, we don't have this item. This item we don't have. We don't have even the gain and loss, amortization. Hatuna hizo. So what we have to do, we can get this. Can you give me the summation of this? We get the cash flow after working capital. Yes, cash flow after working capital. Cash flow after working capital. So you can give me the total here. Cash flows after working capital. Cash flow after working capital. So can you give me the cash flow after working capital? Hii 5,000 acquisition equal additional information number gani? Equal additional information number 2. Additional information number 2. Asante. So we can have my sharings here in 1,000. Sharings here in 1,000. Sharings here in. Once you see it, you can confirm whether you have seen it. Ukipata unasema, you can as well use the dancing emoji to dance. It's as well a milestone to achieve and to see what you had not seen. It's a milestone. It's a milestone. So can you tell me the total here? Somebody is adding up. You have a phone. You can add all this up to this, then subtract this, or you add first all the additional, add them, and then you subtract. 26,590 from Christine. I'll go with that, but I expect somebody else to give me that. Let's compare with what Christine is giving us. Tafadhali. At least do something from your end. Usikae tu. Remember, you're saving this time. We shall be adding by loud 155. So I'll just go with what Christine has. 26,590. 26,590. Then, class, we were able to compute our tax. Less tax paid. Simple. And interest paid. Somebody to remind me, the tax paid was how much? Tax paid, and the interest paid. Tax paid and interest paid. Tax paid and interest paid. Very fast. Somebody. I want us to finish up with this. We move to the next one. Because the working for the tax, it will require us to take some few minutes. So if you can remember, or for those people who are available, can as well give us. But if you cannot remember, we can as well do it. Let's see. Tax paid was Wali. That was interest paid, right? I think that was interest paid. How many tax? Okay. So I think what we should do, let's do this. Let's have an account here very fast. Getting that 3 total. Agnes, usisahau hapa Usisahau hapa pia. Usisahau hii pia. Agnes, all of this, yeah, even profit before tax. Yote. So this is a tax account. Remember, if we are coming up with a tax account, this is debit, this credit side. So the balance brought down will be on this side, and balance carried down will be on this side. Therefore, 26,590. That is what you're giving me. Peter, can you pick your calculator or you pick your phone and then give me the result of this? That will be cash flow after working capital. All these cash flow after working capital, zote kutoka hapa. Total from profit before tax. That 4090. Na mwenye nipatia 26. No, I don't have my calculator here. Can you people confirm all this? Kitu yenye tunatoa tu ni vitu mbili. 120 unatoa, 400 unatoa. So do all this, confirm that. So can you check our tax? You check our tax. The balance that was brought down, ya tax yetu ni ngapi? Balance, you can see we have two tax, deferred tax and the current tax. 5570, and then deferred tax. Deferred tax on the same is 7070. That is the balance that was brought down. People are getting 33,790. 33,790. Please confirm, continue confirming. Then we have 4230. 4230, that is in the balance sheet under the I've done Kristen, just confirm. So 4230. And then we have the deferred tax on the same. Ukiangalia vizuri iko ngapi? Hiyo deferred tax 6750. 750. Then there was an information regarding this. There was some information that we were told that however, it accounts for deferred tax on valuation gain. The income tax rate applicable to Budo Limited is 30%. So we were to get that percent of the on the revaluation gain, 30% of the revaluation gain. So that was to fall under a deferred tax. And people got something. What is that percent of 1200? 30% of 1200. How much are you getting? How much are you getting? Let me withdraw this one. Withdraw that one. 33. 360. So 360. And then remember, in the income tax or in the income statement, we had paid tax. 33. 33. People are giving me something here. I'm going to see this. 33,790. 790. So there was tax that was paid in the income statement. Income tax expense 4830. 4830. So that one inakuwa hapa. Alafu sasa kumbuka tunatafuta the tax that was paid. The tax that was paid. So add for me all this. This side naona ni mingi, obvious. Ama? Yeah, this side ni mingi. Ongeza hii yote, alafu tutoe hii, tupate bank account. The tax that was paid ndio tunatafuta pale. Interest tumepewa na Y pale. You will do the same, by the way. For the interest, you also draw the same T account. You take the balance brought down, you take the balance carried down, and then from the income statement, you had your finance cost over 3800. Na utapata the bank account. Pesa yenye imekuwa paid itakuwa on that side. So can you give me the tax? Interest tumepewa pale na mtu. Kuna mtu ametupatia pale 68 something. Kwa wapi sasa? 6850. 6850. Yeah, 6850. Interest yetu tutatoa 6850. Aya, nataka sasa mnipe the total hapa. 17,830. 17,830. I hope you have started with that side. 17,830. I hope ni his side. I don't know. And then can you subtract this to get the balance, the tax that was paid. Whatever that you get there is the tax paid. Whatever that you get there is the tax paid. The tax paid. Bank. huwa tunaiita bank. The tax, we assume it was paid through bank. It was paid through bank check. 6850. That is the difference. Ama ni wapi sasa? Oh, so that was the tax. Oh. Okay. 6850, 6850, 6850. What about the so that was the tax. All right. Asante. So that was the tax paid, 6850. What about the interest? The interest paid, interest paid. You can do it very fast because I have seen you people, you are eager to do this and to know this. I can as well do this. I can as well do it here very fast. I can see you people, you are eager and you are doing it very fast. So let's do it. Why not? And we have to help each other. This is the interest account. So balance that was brought down, you just go to the non-current asset under the balance sheet. Non-current asset nikiangalia interest payable 4800 na 35. 4800 na 3500. Yaani inakuwa rahisi hivyo. Alafu unaangalia income statement tulikuwa tumelipa ngapi? 3800. So can you give me total here? Total and then we see bank interest paid sasa tutaipata hivyo. As simple as that. As simple as that. Hizi vitu ni rahisi hivyo. Also, if you had a very nice background in the foundation level, it will become very easy. So I'm being given 5100. So 5100 we're going to subtract, and then we can get the net cash flow from operating activities. So now that one you take it to the other column. Now, can you take that 3790 minus those two? So that we go to the next part of cash flow from interest paid is 5100. Yes, asante. So we shall go to the next part, which is cash flow from investing activities. Cash flow from investing activities, and I told you that we get that from what? The non-current asset 21,840. 21,840. People are getting 21,840. 21,840. Asante. And it's a positive. Now, from our analysis or from what we have seen that they acquired what? PPE worth how much? Somebody. Acquisition of PPE. Hiyo tulisha compute. Na pia tumeambiwa acquisition of patent. Was it patent ama ilikuwa nini? Acquisition of ile stuff, intangible asset. Hizo mbili ndizo zinatu affect tu hapa. Hatuna vitu mingi. Okay, how much did they acquire? They acquired PPE worth how much? Ile balancing figure tulipata kwa PPE account, if you can remember, ilikuwa ngapi sasa? Mwenye anafuatilia anaweza tusaidia. 10,800, and that is an outflow. Hiyo ni pesa ilitoka. If you acquire, remember we are looking at what is happened to our cash, and then they had acquired the patent of 5,000, and we are done. We're not having any other thing unless you give me any information that is giving me any other thing. Can you see any information? I cannot see any information giving me any other thing under investment. So whatever that we get at the end there, it will be net cash flow from investing activity. Give me the total activities. Give me the total. Of course, it will be an outflow. Itakuwa negative. That is 10,800. Here 15,800. Even I don't need to be 15,800. We are done. Then class, we move direct to what? Direct to our, let me see the time. Mukifanya venye mnaendelea, tutamaliza. Cash flow from financing activity is our last activity. Cash flow from financing activities. This is easy. I want to show you another way to do this very fast. 60-40 bado najua Christine umefanya ile bado. Sasa tunataka mpaka tupate ya hii activity. Tuko na activity 3. Tukipata hiyo sasa we have the aggregate. Now, can you go direct to where we have the equity? That is where we shall get these items. Tuko na ordinary share. If you look at the start, ordinary share capital value was how much? 32,000. I don't know whether you can see that. Then at the end, ordinary share ni ngapi? Did they issue share? And then do we have information? Do we have any other information that is talking about the ordinary share? Remember, ordinary share and the share premium hizo zinakuwa cousin. You can combine them or you can work them separate. So this one, you go with that analysis of what? That analysis of taking the closing minus opening. So if I look at what I have here, closing is 40,000 and the opening is 3,200. So ordinary share capital. So there was you can say issue. Tunaweza ziunganisha issue of shares, increase in share premium. So if I look at that, I have 40,000 minus 32,000, it will give me 8,000. Can you give me the value of our share premium? Give me the value of our share premium. Tuko na 3,000 and then mwanzo tulikuwa na ngapi? 26. Therefore, there was increase of 400 like that. Done. Then we look at the other item that we have been given here. Can you look at additional information that we were told there was issue of neuron worth how much? Issue of neuron ilikuwa worth how much? 3,000. Yes, and additional information, the issue of neuron was worth 3,000. We are almost there. Now, we're remaining with 2 items here. And I can see we have retained earning. For the retained earning, class, remember, anytime you are given retained earning, it will assist you to get what? It will assist you to get the dividend paid. Therefore, let's open a retained earning account. I think I'll just use here retained earning. You can have the retained earning account. So retained earning account. It will assist us to know how much this is debit, this is credit, and of course it will have a credit balance. Brought down. So can you give me the balance for our retained earning, balance that was brought down? Retained earnings just there. Haina maneno hiyo. Retained earning yetu ama retained profit 42. Can you see 42,400? 42,400. And then the balance that is carried down, it is how much? 52,770. 52,770. Then you ask yourself, what was the retained earning in the income statement? The income statement, retained earning for the income statement. Somebody to give us the retained earning pale ni ngapi? Income statement yetu. Income statement. Can you see the profit for the year? 13,870. 13,870. So from income statement, you have 13,870. And then whatever that you get here, the balancing figure will be the dividend paid. So can you add for me this side for Mingi? Alafu hapa. Add for me. The faster you do it, the better. And I hope all of us have enrolled in our classes. I hope you have enrolled in our classes and you are familiar of the ongoing offer. Remember, we usually have 2 sessions, early morning and evening. Early morning start from 5 a.m. to 7 a.m. So already I've been given, what are you giving me? I think Agnes amefanya kila kitu, ananipatia bank hapa itakuwa 3,500. So this is the dividend paid. The dividend paid. Remember, dividend is always paid from the profit. Dividend paid of 3,500. So that was an outflow. It was an outflow, and therefore we have to reduce it. Asante Simon, asante sana. Now we have to check any other thing that we have here. Great. We have this our long-term loan. If you look at our long-term loan there, still fall under that. We need to know whether they paid. How about the revaluation surplus? Walimu, do we have account for the revaluation surplus? Okay, Wari ameuliza kuhusu revaluation. We have revaluation surplus 25. Tulikuwa na 25, tunafunga na 34. Tulikuwa na 25, tunafunga na 34. So we shall look at it. And see whether it will affect us. So let's look at long-term borrowing. This long-term borrowing, our long-term borrowing here. If I look at my long-term borrowing, let's see what happened. Long-term borrowing. Borrowing here. Okay, account. So the balance brought down should be on this side, and the amount is 46,800. 800, and then we have balance carried down of how much? That's 7,550. That's 7,550. And then remember there's a loan that we have issued. What happened to the loan issued? What happened? We issued loan. What happened to our balances here? Somebody. We rate reduce, we rate increase. There was look at that statement. It will guide you. That statement will guide you. Already Caroline inashaona hiyo. If you look at that statement, if we issue, it will increase our loan. So issue of 3,000. So the balancing fee, that means they paid loan, bank account, walilipa loan ya ngapi? So give me the balancing figure tuone walilipa. So loan paid. Yeah, walilipa watu. Walilipa loan ya ngapi? Give me the figure there. Give me the figure. Walilipa loan ya ngapi? Walilipa loan ya ngapi? How much are you getting as the balance there? $12 to $50. That will be an outflow. 12 to 50. It will be an outflow. Then I want to look at the revaluation. There's a revaluation that one of us is asking. The revaluation. Remember, we had this revaluation this year. Look at additional information number 1. During the year that 1st October 2023, the property was revalued upward for a gain amounting to this. The company does not make any transfer for excess depreciation upon revaluation. So the revaluation in the balance sheet will not affect us here. It will not affect us here because you told that the company does not make any transfer. So there's no way that revaluation is linking us here. So in this case, I think that is all about our financing. So can you give me the total? Give me the total. How much is our total there? Net cash flow from financing. I think that is what we are looking at here. Net cash flow. Cash flow from financing activity. Financing activity ni ngapi? Patia pale mwisho. So that we are able to get then the 4350. People are getting 4350, which is a negative. 4350, which is a negative. So with that, now can we get what who was giving us? Is it Caroline or Christine? Now can you pick this minus this minus this? the three. Kindly after class, share the ad info so that I can screenshot. Okay, sawa. So we shall do that. So can you add for me so that we get net changes in cash and cash equivalent, net changes in cash and cash equivalent. I've been given 1690. I've been given 1690. Class, we usually add cash and cash equivalent brought down. Add. From that you add cash and cash equivalent, brought down, balance brought down. How do we get cash and cash equivalent balance brought down? You go to where now we have the current assets. Where we have the current asset, you have the cash and cash equivalent, and this is how you do it. Cash and cash equivalent, I can see we had 46. Tulikuwa na 4670. But remember, wakati mwingine utakuta kwamba uko na mpaka short term loans pale hapo kwa short term investment, not loans, short term investment, and you have bank overdraft. So you pick what you have, right? For example, here we have 4670 plus, be very keen here, plus short-term investment kama iko, whatever that you get there, you less what? Bank overdraft. Tafadhali note that. But in our case, in our case here, we have 4670. So we don't have the other item. 4670. So can you add for me so that we get cash and cash equivalent, equivalent balance. This is balance carried down at the end of the period. Ningapi? What are you getting? Add for me 1690 plus 4670. What are you getting now? 6360. And then you check, you confirm with your question, Is it balancing? You just confirm with the cash and cash equivalent as at the end of the date now. The end of the period, cash and cash equivalent, I can see for sure it is 6360. So Wari anasema, we explain again hapo tunasema kwamba for you to get cash and cash equivalent, all the cash and cash equivalent balance brought down, it is for the previous year, and you have to pick that cash provided or the bank item, and then you add any short-term investment. In this question, there was no short-term investment, but it will be indicated there under the current asset. You add it, and then you less what? You less what? Bank overdraft. You'll be getting that. Yes, Kerose. So I think, class, that is marking the end of our session today. But for the sake of Kelosi, I'm going to show how. You do it when given what? When given the part. Somebody requested for me to display the additional information. So when given the part, this is how you do it. Do not forget to enroll with us, by the way. Contact our customer care number 0719 525,000 or 0793 555 000. We have both sessions for FR and FM. Like tomorrow, if you wish to join us tomorrow we shall be having financial. Tomorrow is Thursday. Yeah, we shall be having financial reporting tomorrow in the morning. So you can contact our customer care, and if you are retaking, we say that you can pay 3,200. If you are retaking, there is an offer that is going on. If you're taking, you can pay that 200. If you're not retaking, you can just pay 4,000, and then you'll be in a position to be to join our ongoing classes. So the pay bill is 6242 839, and then account number, you can use the unit name. Kama ni FR, FM, like that, the short form, unit name report. So Kerosi, this is what happens. So for those who are going back to work, feel free to read the meeting, but if you have to maybe wait for the explanation, if you're given the part, no worries, you are also free for that. You're also free for that. So in the cases whereby you're given the part, in the cases whereby examiner give you the part, profit after tax, this is profit after tax. So I take you back to the income statement. We know that profit before tax, we less tax, upper, so that we get what? Profit after tax. So examiner sometimes will give you this. When examiner give you this, when you're preparing your statement of cash flow, whereby we have the cash flow from operating activities, down there, of course, here you shall be having your sharings, whatever. Down there, just put your part. Put your part. Then remember that this part, we had subtracted tax in it. So under adjustment of non-cash item, under adjustment of non-cash item, bring this tax. You add tax expense. You call it tax expense. So you shall have returned this profit to a profit before tax. Okay, Rossi, are we together now? Do you understand that concept? Do you understand the concept? So you bring tax, you add it back under adjustment of non-cash item. Okay, Rossi, are we together? And any other person who wanted to know that, are we together? And how about deducting operating expenses? Now that is the, I think when you go now in that route, that is the direct method. Whatever that we are talking about here is indirect method. So whatever that you're talking about, that is the direct method. Are we together? Asante. So class, thank you so much for having time to attend our today's session. We really appreciate. We know it's a big sacrifice. We are here to assist each other. Asanteni sana. I have been your lecturer, Stephen. Thank you so much, and may you have a blessed afternoon. Goodbye. Is there any question?